Tesla is down nearly 12% in the last 5 days. TSLY is slightly higher than that, just over 15% in the last 5 days. But again, they did have their ex-dividend date fall this week. So again, it's no surprise that my TSLY fund is down by 11%. So in line with Tesla, and again, cushioned by the covered call income that came in last week. So what we're going to do in this video, we're going to go through how much money I made last week, the moves I made, how much premium I'm going to be making this week as an estimate. And then we'll have a look at the chart. And as you can see, is an absolute climatic fall for Tesla. So we'll get into that and where my covered call strike is for this week. So again, if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So in week 11, we managed to get $300, which was slightly higher than the estimate that we had. So if we scroll down to the covered call section, if you guys remember, we sold the 207.50 for $281. That's what we had here in week 11 as an estimate. And then on the Thursday, I bought this option back for $2. And then what I did something that I've not done yet in this experiment, challenge, whatever you want to call it, is that I rolled down my call to below my synthetic strike. So my synthetic strike was at 202.50. And I did the 190 call because I left it late for rolling the call. I did leave it until the Wednesday, Thursday time. However, I did manage to go and scrape in an extra $23, which I did buy back for $2. So I made $21 on the trade, which again gave me my $300 premium or $3 per share dividend, which again was 1.16% of the account. It was the lowest payout. And as with all of these yieldmax funds, as the underlying continues to drop, the amount of premium you can collect on a covered call or call right strategy, it gets lower in terms of absolute premium. So therefore, as a percentage of the capital, it kind of drops from that perspective. But again, that then brought in the $300, which gives us total dividend of just over 4.7k, which again, if you look at it here, I'm projected to make 22.3k yield, which is a 74% return on the original 30 grand that we started with, which again, I'm not complaining about. So what we did then on the Friday, obviously Tesla has dropped big for when we had it at the 202.50 and Tesla's currently trading at 175. I decided to close out of the synthetic and then taking a 2.8k loss on closing the synthetic and then reestablish the synthetic at the 175 mark, where Tesla is trading just over 175. So realized gain there of $34. And then what I did is I opened the 180 call, so that is $5 above the current strike, the current price, for $282, which is what we see here as the overall estimate. So that's where we are. We have a look at it in terms of returns. If we did reinvest back up the dividends, which I'm not doing, we'll be down 22%. And again, if we just look at it from, scroll up slightly and make this a bit, well, this arrow is where we kind of started. We did drop all the way there, bad earnings, came back, filled that gap of earnings, and then started to make a new low. Look at that, low is at 173.71 compared to this low here of 175.01. So again, made a new low, and you can see we're pretty much at that low point over here. These prices, I'll be honest, are starting to get a bit attractive to actually just purchase some shares in Tesla. So that's something I've been looking at as part of my other portfolio, but that's for a different conversation. Cool. So that's kind of where we're at. And if we did reinvest the dividends, or if we didn't reinvest the dividends, which is what I'm doing, we would be down 30%, or we are down 30% on the overall portfolio. So the current balance is 23,289, which again, is 7-ish grand behind on where we need to be in this piece. So again, if you benchmark this as something like a Coiny, for example, which has only been going up we would be collecting a lot more money, a lot more yield, and the fund itself would also be up as opposed to, being down overall by 30%. So if we have a look now at the technicals of what we're doing, so we kind of drew this ascending triangle pattern where with the assumption was we'll be breaking out, but it broke out to the downside. We had a bit of a gap down here. I think primarily reading the news, this is about Tesla's China numbers not coming in as good as they should be. So again, we kind of had the covered call over here. It didn't get anywhere near this price. It didn't even hit their prior highs there. So that kind of became redundant. And then, so now what we've got, I like this scenario here because again, if you see here, 1, 2, 3, 4, 5, 6, 7, I've only got 7 weeks worth of data that we can see here. 8, and there's your missed pivot there. The last 8 weeks, Tesla has hit its weekly pivot. And if we do get that hit to the weekly pivot, it's meant to say this week as opposed to this last week. So apologies for that. So this week's cover call is at 180 with the pivot level sitting at, let's have a look here. Can't remember what this pivot level was sitting at, 182.92. So again, if we can get above here, we've got a $5 plus the cover call premium to potentially collect, which would be a nice gain for us to gain in week. So pretty comfortable with where we're at. Again, this is all part and parcel of the process. Is we take the losses, and again, the reason why I took the loss here is I can't sell cover calls at 202.50. There's just no premium in there, so I'm gonna have to re-establish at the 175. And that's kind of the way it's been working. I think it's probably one of the biggest losses, 2.8. This one over here was at 3.6. So we've had some big losses. I think that's probably around earnings time as well. But again, still continuing to collect premium. So if we look at the average premium that I've collected, still collecting over $400 every single week on this. And again, this is an average of an average, so don't take this as that. That's 1.5% return every single week on my capital. So really happy with that performance. Again, it's not where I want the stock price to be, but I just wanted to kind of keep you guys on the straight and narrow and show you guys how we've been doing this and how we still be able to generate 74% yield on a stock that is down nearly 30 to 35% over the last few months. So hope you like the sound of that. Make sure you like and subscribe, and I shall see you guys in the next video.